The distressed opportunity at this time, as you all well know, is very broad. And really, if you're going to look back and compare it to the past distress cycles, those were primarily centered around one or two broad areas. This time around, almost any sector you look at, spreads are at wide levels compared to historical standards. So it's important when you think about distressed investing overall to look at it as a comprehensive landscape of opportunities, because very often people just think about it as corporate distressed investing. And it's very much a part of the opportunity. It's a huge part of the opportunity. But there are all these other areas. So I really look at it kind of across five key categories of assets. The residential mortgage-backed securities market and whole loan market. It is a very large opportunity. As you all know, the size of the residential mortgage market in the U.S. is $11 trillion. Of course, that includes whole loans, that includes all the Alt-A and subprime mortgage-backed securities, and it includes the $5+ trillion of conforming, like Fannie and Freddie paper. But if you look kind of within each of those categories, there's obviously going to be, other than the conforming part of the market, there's a lot of paper to still be worked out. I mean, the opportunity obviously varies depending on whether it is whole loans, whether it is Alt-A, et cetera. But generally, it's certainly something to keep in mind and put within the entire distress framework. Then we have, obviously, a major commercial real estate crisis on our hands. We're just at the beginning of it. But it is important to consider that the commercial debt market in the U.S. is $3.5 trillion, okay? And that consists of whole loans, and it consists of commercial mortgage-backed securities, and it consists of REIT corporate debt and all the other type forms of commercial debt. I'm not even including all the real property opportunity, which is coming. So that's the second sector, residential commercial. The third very large area, obviously, is the corporate distressed debt, and we'll spend the majority of our time talking about that. Just to put kind of numbers on the table, the leveraged loan market in the U.S. is $1.6 trillion. The high yield market in the U.S. is $1.1 trillion. In Europe, lending is dominated by banks, so the high yield market never quite developed. It's maybe $100 billion. But the leveraged loan market is another trillion US dollars. So here's close to $4 trillion of various corporate securities, and many of them would need some kind of restructuring. The fourth broad area is consumer debt. And often people don't think about that as part of distressed investing. And across all the credit card debt and student loan debt and auto debt, there is some $2.5 trillion of paper. And then the last kind of broad area to keep in mind and watch is all the municipal debt that has been issued. And certainly a lot of it would need to go through some kind of reorganization as our macro numbers continue to be weak, and many of these local governments and municipalities have taken on a substantial amount of obligation given the decreased tax revenue environment. So all these kind of five broad areas is something to keep in mind as you look at the broad landscape of distressed opportunities.